Okay, on.
Okay. All right. Hi, everyone. Thank you for tuning in today at our first workshop of Investing Node Trading Cup 2021. All right. So first of all, would like to express thank you for joining us. And this workshop is actually catered for those who are actually new, new to investment and also for trading. And this is a very good opportunity for you to actually to learn from our speaker and also to ask some questions that you might want to know, and you might use some skills from here today to actually apply in your competition. All right. So before I can start, start our session today. Just let me do a quick sharing here. Okay, so especially for those who are new, all right. So this is our platform. So investingnode.com. So actually, Investing Node is similar with some Facebook and Instagram. So it's quite similar with some others social media out there. But the only difference is that we are actually focused in investors and also traders alone only. Okay, so as you can see in the feed, you can find that some of our users, some real users, doing some sharing, also do some analysis here. So you can find some info here. So let's say if you have during your competition, you actually can run screen through this feed. All right. So other than this feature alone, we also have others like some other features which is prepared for you, which is one of the screeners here, and also one of the chart here where you can do some chart customization here, and some like a watch list. The watch list is quite straightforward. And also we do also have a portfolio management feature here where you can actually manage your portfolio. All right. So other than portfolio, we also have one alert feature. So we have price alert and also event alert. So let's say if you want to like find some events like corporate action or even like result release, so you can actually do some adding here, which let me do a quick example. So let's say if you want to add as Asia, so you just put Asia and just tick whatever you want here and just click save. Okay, so whenever there is some event that is going on, we'll send some notification to you. All right. Okay, so other than that, we also have one of the feature which might be useful for you, which is called the stock calendar. Okay, so the stock calendar is actually where you can find what are the corporate actions or what are the result release like AGM or EGM that is going to happen. Okay, so let's say like this one, Pavilion REITs, where you can find their result release is on today, and also like IGB rates. So you're able to find what are the things that is actually happening. Okay, all right. So other than this, so right now we actually organizing one of the events. So I believe most of you are actually part of this competition as well. It's called the Investing Node Trading Cup 2021. Okay. And today is actually the 4th day. And for those that are actually joining, so good luck and all the best. And as you can see, you can find our leaderboard for the top 20 here. Okay, like the first one, you have 39.94% of total return, and you will also have some daily top trade winners. So if let's say you run out of ideas to trade, right, you actually can click into their portfolio and just look through, see what are their moves, and just to get some trading ideas lah. So you're able to see what the portfolio. So all of these are actually transparent. So let's say if you have any questions, you also can write here like which are the best stocks. So when you write it, so all of us will be able to see lah. Okay. All right. So other than this, we also have let me do a quick one. Okay, so on this coming Saturday, right, we actually have one summit which is called the Investment Summit. So it will be live on morning 10:20. So all of you are actually encouraged to sign up for this event. Okay, so we have speakers from Busan, Malaysia. We have speakers from Malacca Securities, iFast, and also Want to Invest, and our own GM itself also will be speaking on this in this event. So all of you are actually encouraged to sign up, and we will start at 10:20 sharp morning until 12:30 in the afternoon. Okay, so all right. Okay, so let us go into our main topic today. Okay, so today's main topic for today is framework to supercharge your returns from the stock market. All right, so we have actually Jay with us from swing trading with us here today, and I would like to pass the time over to Jay. So Jay, are you there?
Hey, hello.
Yeah.
Hello, hi guys.
All right, Jay, I'll pass the time to you.
Sure. No problem. Thank you.
Okay.
All right. Okay, let me just proceed to share my screen now. Okay, and I assume you all can see, right? Okay, great. Okay, at any one point in time, right, if you guys watching, if you have any questions, you can just type it in the comment section, because I'm also referring to the comments by the side there. So that's why you can see I'm turning left, turning right. It's not because I'm distracted, but I'm just paying attention to if you guys have any question. Okay, so if you got no questions, tonight's webinar will be a very smooth one because usually when we have questions, that's where we will stretch it a little bit. Okay, so my first and foremost, right, thank you Investing Note for having me on board. This for tonight, what I want to share with you is the TS² Framework, something that I created myself, and how I use this TS² Framework to profit from the stock market. And as you know, the stock market of this year is slightly different from that of last year. And predominantly, I focus a lot of my trading on the US market. So the market this year, a little struggle as compared to last year, because it doesn't break out, and run as far as what we have experienced. Last year, basically, you buy anything, right? I think you will be quite happy with whatever thing that you have bought last year, because it would have just gone up by 10-20%, right? So hopefully using this TS² framework, right, and to those of you that are partaking in this trading cup, then hopefully give you an idea of how you can just make use of some of the ideas here to put it into action, and hopefully you are able to get your ranking up in trading cup as well. Okay, so without further ado, let us officially begin. And maybe some of you do have no idea like what I do, who am I. My name is Jay, by the way. So I'm also a user of Investing Note. You can actually find me on Investing Note itself. So yeah, so if you find me, just say hi to me, just help me type it in the comment, so at least I know, like, who is watching this. And this is what I do. I'm a full-time equity and derivative trader. By saying full-time, I think it's a little overstatement, because first few years was kind of a struggle. The capital was undercapitalized, and at that time being young. So right now I'm just in my mid-30s, right? When I first started, it was only 20 over years old. So that was about 10, 11 years ago. So I had a dream of want to trade full-time, but I have no idea that it's going to be so tough to sustain. So I've done many things along my journey, especially in the initial years. Many odd jobs, many things that are, looking back, it can be quite fun. Delivery, giving flyers. And yeah, after finishing my uni, right, I didn't go and work. That's the thinking back. It is not a very smart choice, but hey, it's one kind of a bold choice, given that if I'm going to make the same decision today, I don't think I'll be able to do it. So this is what I have been doing since 2015, and I share through my own platform, or rather swim trading. So this is something that I founded myself, my baby. So you can see I've been invited to Traders Fair, Invest Fair, and across various brokers in Singapore and as well as Malaysia, to share some of my trading insights. All right, so just to give you an idea of who am I and what I do. And primarily, right, I focus a lot on US market. I'm a Singaporean, so my sleeping hours are quite odd, 12 hours apart, because I stay up for the US market. But of course, I don't stay until market close, because that will be until 4 a.m. Singapore time. That will be a little too late. But most of the time, I will just sleep 2 to 3 a.m. Yeah, something like that. So practically, this is what I do. So today, right, I think I will want to touch on this framework. Number one, namely, because most of the people that are jumping into trading and investing, right, I think they have got no framework. They are just jumping in for the sake of just, I just want to buy. Then, and what kind of stocks I buy? So there is always a big question mark, right? For Malaysians, especially Malaysians, I think there are also a lot of influencers, gurus online, on newspaper. They will say, buy stocks like Top Glove, buy stocks like all the Kosan in industries, that kind of stocks that were fantastic last year. But this year, right, if you go and take a look at it, right, there's all the stocks, they are just underperforming the market. On the other hand, right, this year, if you look at JHM, if you look at not Kajaya, what is that? DNO, these are the kind of stocks that are really just performing. And it is, and for me, I'm not a Malaysian. I don't really trade the Malaysia market, but I do have Malaysia students that sometimes ask me about, some of the stocks in Malaysia. And using the same framework, this is how I'm able to find out the stocks that, they all the strong stocks that I mentioned. So this framework, just to give you an overview, it is a complete framework in that sense. It really goes from starting of how you find, okay? Practically, it's all about finding the stocks, and then what do you do with the stocks that you find, rather than just, I don't know what to do, I immediately jump into trade execution. I think this is the number one mistake of most new traders to the market. Like counting back initially when I started, I believe was the same thing as well. I was looking at the news. I was looking at news. I was going on Facebook, like maybe even on investing note. You are just looking for tips. You are just looking for what ideas. I don't know what to buy. I see that guy buy that, anyhow buy lah. Some of us, right, even go one step further. Yeah, I know ARKK, Katie Wood. So ARKK, it's she's the fund manager of ARKK lah. So she founded this ETF, highly followed for her choice of selections of stocks within her portfolio. And everybody is like, okay, I'm going to track what she buy, because whatever that she buy, right, seems to be, have that kind of annotation that is related to Tesla. Like things like, wow, Tesla is a fanboy, whatever you touch, then she'll fly on, okay. So last year, Tesla was one of the stocks in ARKK portfolio. And I do know of people, and kid you not, I really do know of people who are tracking exactly what she's buying. And like, wow, hey, there's a shift in her portfolio. She increased this, she bought this. So what am I gonna do? Follow. Then I'm like, if you're gonna follow exactly what she does, right? Why not just buy the ETF? Why make your life so difficult? Why go and buy individual stock yourself? So that was always the question that I didn't manage to have an answer to lah. And whenever I see people doing this, right, I every time got this impression like, why are you doing this? It's your hard-earned money, your own hard-earned money, right? And let's say today you don't know me and I say, hey, can you lend me $500? Are you just gonna say, yeah, take my money? Nobody does that, right? Hey, but when it comes to investing, somehow all our common sense and logic just got thrown out the window. Do you think so? So what happened is, it's like, hey, yeah, this stock is good. You should buy this. And then guess what? Without knowing, without batting an eyelid, the next thing you do, you log into a trading account and then you go and buy this stock. So this is usually what I see most traders doing. They immediately just find some tips, find some things, and this is the number one mistake. They will just jump into trade execution without knowing what they are in for, and without doing their necessary, I would say, due diligence. So this is why I want to make use of this opportunity to share this TS² framework with you lah. So practically, I have no idea how many people is watching now. And because usually when I do my webinars, I prefer some sort of interaction. So it's kind of weird over here that I'm just talking to myself, and I don't know who is in the room. I don't know who is watching this. Maybe I'm just doing it myself. So if you are watching this, right, do me a favor. I think you can see the post inside investing note. So do drop me a comment as well. And yeah, let me know what are the things you want me to answer. And yeah, I can be looking at some of them as well. Okay, so let me see if I can see the comments. Yeah, practically, I think I'm just stuck there. Wait, just give me 1 minute because I can't see the comments. Oh, hi, Paul. Hello. Conway, hello. Hi, Conway. Paul. Okay. How to supercharge? You add battery to it, then can supercharge. Okay, no problem. So guys, keep your comments coming. I'll be paying attention to the comments. It's on my right side. So FYI, I got 6 screen. Just now you saw on my com, right? Okay, so it always start with finding stocks. I find finding stocks is very important. Don't find it from guru. We must have a certain process of finding stock. So step number 2, right? What we're gonna do is then after I find already, I'm going to qualify. So qualify what? Uptrend, downtrend. That's the bare minimum. We must make use of some charting, right, to tell us whether is it uptrend, downtrend. That's the bare minimum. Or whether is it the right timing. This one we have to wait, right? But those that are not in the favor of our trend, we should just ignore them. We should just push it to one side rather than just insisting on trading them. Like for example, if you look at stocks like Top Glove, right, and you're thinking of buying, then to me, it very evidently, if you look at Top Glove, what does it show now? It's going down, right? If you look at Bursa, okay, you look at KLCI right now, and you say, oh, I want to buy, I just want to randomly go and buy the KLCI 30 stocks. And why? Because the whole KLCI is coming down. It already broke a key support level. Then it broke down, it came down. Then why are you buying? So this is something I don't understand. Because for me, right, whatever that you want to buy, it should be of primarily an uptrend. Because things you want to buy and it's a downtrend. Just imagine this. When there's money flowing out, right, of the market, billions and billions of dollars is flowing out of the market. And then what you're trying to do, you're taking your thousands and trying to, stop flowing out. Thousands versus billions. Who do you think will win? Obviously, the trend will win. We will never win. Unless you have billions, then different. You make the market. People will follow you. Chances are all of us together, we don't even have a billion. So that's where I think we have to follow the market instead of requesting the market to follow us. So that's the second thing that I will do in this framework. So obviously later in this, the rest of this webinar, I will be sharing with you detailed steps and as well as a case study of how I put into all this. So it gives you an idea of, what to enter, why do we want to enter there and things like that. I think it solves a lot of problems rather than just, I see this stock, I think the guy talk about it, so I want to buy. I don't think that's a very healthy relationship between yourself and your money. So after knowing at least whether is it uptrend, downtrend, right? Then the third thing that you should do is then choose a good company as well. So you don't want to be choosing a lousy company depending on your time frame. If your time frame is those that are of long term, then the more the fundamentals will play a part. But if let's say your trades are all mostly short terms, right? Meaning they are either weeks, okay, or like days, this kind, then fundamental honestly wouldn't be a huge consideration. Okay, fundamental wouldn't be a very huge consideration because it's all short term, right? Fundamentals don't really change all that much in between every earnings. So yeah, that's how that's kind of the weightage that you should be giving to your fundamental analysis. And to me, I feel that for me, my style is always a few days to mostly few weeks kind of trade. I'm more of a swing trader. So when I do my style of trading, right, in this time frame, do I really go into like long-term fundamentals? I go into the growth ratio. I go into like the book value discount, intrinsic value, things like that. Do I go for this kind of thing? I don't, because those are for very long-term fundamentalists, and I am not one of them. So nothing right, nothing wrong. You see, there are many ways to make money. Some people, they have the long-term way of making money. There's a long-term plan. Some people, there's a short-term plan. So depending on your temperament, depending on what you want as well. But if let's say you want to win this trading cup, or you want to be ranked, in the top few places in this trading cup, then obviously you cannot be looking at long-term because there's a duration for this trading cup, all right? So for your own trading, it really depends on what you like to trade, or what is your trading style. So having done that, right? Having done that, okay, let me see. Hello, hi David, Paul, Serene, Brina, hello. Okay, great. I need to manually refresh, then I can see your questions. Don't worry, I'll be clicking refresh from time to time. Okay, so after having done that, then step number 4, it will be wait. What do we wait for? This waiting part is the hardest thing that a trader can ever do. This is the toughest, this is the hardest. We will always wait for what? We will always wait for prices to go to a predetermined zone. That's the thing. Okay. Our process, this flow chart, the process should tell us what price level that we must wait for. So this price level, right, whether is it from a TA perspective, okay, from a technical analysis perspective, we must be able to identify the demand zone. We must be able to identify where the supply zone is. So this, right, would then tell us that stock, is it considered to be cheap or is it considered to be expensive? So I think this is a very, very important portion that as a trader, as an investor, I don't care whether you're long-term, short-term, knowing how to read the price chart, it gives you an edge in the things that you do. All right. So you would then, once you understand this, right, you will not be asking questions like, what do you think of this? Should I buy this? It's like, do you ask other people? Why do you ask other people about your own money? For me, I find that ridiculous. Why? Because it's your own money. Why are you asking people about how you should spend your money? That's a bit weird, right? I mean, if it's a family decision, you consult your family, that's right. But here is a buying, selling decision, is an investment decision, then it should be based on facts. It should be based on numbers rather than just based on opinion. Because if honestly today, if you ask me a certain thing like, hey, Jay, should I buy this? Should I buy that? So what if I can tell you, yeah, you should. Are you really just going to trust me blindly and buy? No, don't do this kind of thing. Why? Because if today, same thing, like I said, if I were to say, hey, give me $500, will you give me $500? I don't think so. So be in charge of your own money. Be a good steward of your own money. Basically, this is what we are doing. This whole business is about being in charge of our money and deploying our money. Okay. So finally, having done that, right, the last thing we need to do is to calculate our risk. And this risk management is what keeps a trader in the business for the long term. Or, some of them, they just blow up their account within a short period of time and then that's it. End of story. And then they'll just go back to do whatever they do. And the only reason that I'm able to survive, and note, I use the word survive from then when I first started, right, was because I very kiasi. That means I scared of losing. So I every time go very small. I have my due diligence, my checks and all that. But when I go, I always ask myself this one thing, how much can I lose? Because I will always set a budget for me to lose. I don't like to just going long. I don't like to just going to just go in without a budget and fly blind. Correct. Okay. So now this is the TS² framework of what I will be explaining to you. All right. And to keep it in the context of this webinar tonight, right? If you ask me a good question, I will be able to give you a good answer. A constructive question will get a constructive answer. If not, it will just be plain copy trading, right? So now let's head back to this framework. Finally, you just do your trade execution, blah blah blah, whatever. This is basically what the TS² framework is about. So number one, right? Step number one is always about finding the star players, right? I know in Malaysia, maybe basketball is not such a big game, but worldwide, right? If you look at US, basketball is a big thing in US. Basically, a lot of sports are big things is a big thing in US. But for Malaysia, maybe you think in terms of badminton. Yeah, you think in terms of badminton, right? We want to find all the good players. We don't want to just go to like, the school level or the district level. We want to go up to the state level. And then from there, we're going to choose the best of this player and put them into a team. And this team becomes a national team. And this is the reason why, right? All the national team that we have, when we send them out, they are always the strongest of what our country have. So in terms of stocks, right, it is the same idea. When we have, when we are doing trading, right, we want to have all the strong stocks. Okay, we want to have all the strong stocks. And if I may, right, guys, do me a favor in the comment section, right, just help me type in strong stocks. With that, can you just help me do that? Just help me type in strong stock. Okay. The reason why I want you to key in certain things, right, is so that you can remember some of the things that I'll be sharing with you over the next 1 hour, because I'll be talking quite a lot in the next 1 hour. So these will be the things that you will remember. All right. So we will start to find all the strong stocks. For me, I never like the hot stocks. I know a lot of people are just very attracted to hot stocks. Just like a moth, right? A fly will always fly towards a light source. And then guess what? You every time get zap and then you will just die there. So I never like to go into hot stocks. What are some of the hot stocks? NIO, Tesla, okay, TSLA. If you're looking at US, you also have Sun Power, like Sunrun, all this. All these are the very hot stocks like JD. Like right now, you know what are the hot stocks? Tencent, Tiancheng, then you also have what TME, and people very weird one. The lower the price go, right, the more they want to buy. Why? I don't blame them lah, because from young, right, we all have this mentality. Oh, it's on sale, it's on promotion, it's on discount. Okay, it works when we are buying, shopping. When who doesn't love a discount? I love a discount. When I want to buy thing, if let's say my TV there, right? I bought my TV at about close to $500 only. Okay, the original selling price is like 600 plus. Who doesn't love a discount? I love it. But when it comes to stock trading, that's where this concept, right, doesn't work, because as we expect, the prices come down and down and down, and then we think that, hey, this one is first floor, and then we just decide to buy. Oh, why? Because this is a big company. It's a company won't go bust one. For example, Top Glove. I think you all should be quite familiar with Top Glove. So Top Glove last year ran up by so much until the owner became one of the richest in Malaysia, right? And then a lot of all the gurus, influencers, they all talking about glove stocks. Buy Kosan Rubber Industry, go and buy Top Glove, go and buy all this stock. So those are the hot stocks, because people what they do is they keep fluffing it up, okay? Just like hot air, right? They just keep fluffing it up. So that's Top Glove. Then after that, what they do, they thought that the prices won't go down further because it's a big company. They have good numbers and all that. But what they didn't know is, if you think that one is called cheap, because it's on level 1, right? In stock trading, I discovered another dimension. It's called basement. Okay, so there are so many companies, right? If you look at it, all the big names, AirAsia is one of them. Look at the banks, they are one of them. If you think that is cheap, then you realize that, wow, can go down further. Why? Because got this thing called basement. So how much money do you have to go and buy all these stocks that are seemingly cheap, and then they just go all into the basement? If all the stocks you buy are like that, right, then eventually your portfolio will be in the basement as well. You get what I'm saying? Okay, so that's why I never touch any of these stocks. Okay, there's no way that my style I touch any of these stocks. Then you'll be thinking, Jay, then like that, what do you trade? For me, I always trade the strong stocks. So how do we find strong stocks? That's where the concept of relative strength comes in. Okay, so later in the practical demo, right, I will share with you where do I get all this information. Then basically what we want, okay, to give you a nutshell, right, basically what we want is that we are looking at a market. So this one is the market itself. So in the same duration, in the same time frame, if let's say the market has just gone up by 55%, which are the sectors that I should not be touching? I should not be looking at staples. I should not be looking at utilities. I should not be looking at real estate. Okay, for example, over here, what kind of companies should I be looking at? I should be paying attention to discretionary. I should be paying attention to materials, industrial, technology, communication services, etc. So what this chart does, right, is that it immediately shows us what kind of stocks or what kind of sector that we should not be in. So once you have done this, right, you immediately know that, okay, out of like 9, 10, 11 sectors on the US market, which are the ones that I'm able to just immediately just filter out. Okay, so guys, all good. So if everything good, can you just help me type relative strength in the comments section? Okay, just help me type relative strength in the comment section. Great. Okay, hi Ben, hello. So from time to time, I'm just refreshing because that's where all the comments will come out. Yes, Mei Ting, correct. That's right. Strong stock is always the best. So look for stocks like, now in Malaysia, right? What are the strong stocks? DNO, I think is strong. If you look at JHM, I think it's strong as well. So these two offhand, I can think of these two, JHM, DNO, these are strong. The rest are like, not okay, like that. All the big names also all going down. You look at Top Glove, Harvest also go down. You look at Bursa also go down. So everything go down, right? So we find all the strong stocks. We put our money on them. So this acts as a first layer filter. Okay, so we filter away all these things. Then we know, this is a sector, lousy, throw away, don't care. Then will they rotate in? Yes, there will be time that they will rotate in, but not immediately. All right. So strong stocks is always the best, exactly like what Mei Ting says. All right. That's great. So over here, that is the first step. Okay, that's the first step. How we find. Now, let's talk about how do we filter, because filter is very important. Just like you have good coffee bean, right? Then you want to make a good cup of coffee. You don't just take the bean and then you bite and then you drink water. Then it doesn't work like this, right? You have to do. You have to grind the beans in powder, and then powder you have to then put through hot water, and then there's a filter. Then all the bigger sediments will all be filtered out. So same thing when it comes to trading. We have to make sure that we are in the right place. So what is this right place? This is the terrain. So this terrain, right, it's first and foremost trend. Okay, so can everybody do me one more favor? Just help me type trend in the comment section. Can you? Okay, so we must qualify the trend basically from a naked eye point of view. Don't think too deep first. Okay, from the naked eye point of view, you need to ask yourself, is the trend going up or is the trend going down? This is a very common sense thing to do. If the trend is continuously coming down, then why are you buying? Why are you buying? It's just like, I give you an analogy. It's just like your friends, right? Who every time borrow money from you and every time have a tendency to want to return you money. Why are you still lending your money to this guy? It doesn't make sense, right? So same thing. When the trend is coming down and you go and buy, it's like, that's why every time when I see this, right? Wow, should I buy this stock? I'm like, why do you want to take your money and throw? Every time got this kind of reaction. So case in point, a lot of people, they are asking me recently, Jay, can I buy 10 cents now? Why do you want to buy 10 cents? Oh, because it dropped a lot. Then you want to buy. It's like what? It's like, I have this pen knife, right? Just here, I have this pen knife, right? I take this knife, I throw at you. What will you do? Your reaction will be, I siam lah, right or not? Instead, you don't siam, what you want to do? People throw knife at you. Hey, stab me. Make sure hit me, okay? Make sure stab here, right here. Doesn't work lah. So this is why when every time people want to buy cheap stocks, right? I'm like, shopping cheap is good lah, right? You not buy our branded goods. You not buy your LV or Gucci. Cheap is good lah. Buy your car discount, good. Buy house discount, good. But buy stock, you cheap. Cheap doesn't mean good. We need to buy good stock at a reasonable price, not cheap stock at cheap price. So cheap things also will never become expensive. You get what I'm saying, right? Okay. So we go for the quality. We don't go for like, I just want cheap. Yeah, don't lah. That one is like, Chinese got a saying, 贪小便宜. When you're in this market and you 贪小便宜, means you go for all the cheap lobang only. It doesn't work out nicely usually lah. The stock market is very different, right? Shopping different. Shopping we can buy a lot of things. Okay, cheap then we just buy. But stock cheap doesn't mean you anyhow buy lah. You still need some common sense lah. So especially if your term is a short-term plan. Short-term plan, the thing's still going down, you expect to U-turn just because you buy. It doesn't work like this, right? Okay, so the trend at least have to be uptrend. So there's something very wrong with this picture, right? What is wrong with this picture? There's an F1 vehicle, which is commonly used in track racing, okay, in just a circuit, smooth road racing. And then why is it in off-road here? Very wrong, right? It's just like you got a sports car, if let's say you drive a sports car, a Ferrari, a Lamborghini, and then it asks you to go out off-road. It'll be like, oi, walao, how I go off-road? The first thing goes stuck already because your car is so low. So you must be using the right vehicle for the right terrain. So it doesn't mean a 4x4 is lousy, A 4x4, that means if let's say your trading methodology, right, it's for example, day trading. Okay, for example, if you are doing day trading, will you make money every single day? The answer is no. When will you thrive or when will you make more money? When the market, right, it is like going, just volatile, when there is volatility and it is not like it is not, it is more predictable. Like, you don't want to go those like then suddenly jump up, then jump down. This kind very hard to day trade. So we must be able to qualify the, what we do, what's our skill set, then and suit it to the market. So we can't be doing day trading every day. If let's say the market is only like 0.3% gain, 0.5% gain, you day trade very big thing. Every time you'll be waiting. Ayo, that's my profit target. One whole day I wait already, never hit. Then you feel very frustrated. That's where you should change the strategy a little bit. So our strategy must always suit the market. Guys, does it make sense so far? Yeah. So must really suit the market. So over here, right? How do we qualify the terrain? So number one, right, we look at the market behavior. It can be visual. Okay, it can definitely be visual. It can also be using your indicators, whatever. Personally, I don't like to trade with a lot of indicators. So my style is I always trade naked. Okay, not literally, but my charts are naked. My charts are basically just price. I don't have like 10 dozens of indicators. That's my style, because once you know how to read the price, every indicator also tell you something, the same thing about the price, because indicators is derived from the open, high, low, close of the price. That's why all indicators are lagging, right? At best, they are just lagged by how much only, So in the trending phase, let's say here is in a downtrend phase, here in the uptrend phase, here is a ranging phase. We must have different type of strategies to suit this different type of market. So to use it in today's context, right? In the US market, I think it's undeniable that we are in a trending market and it's an uptrend market. So if we want to go and do our short sell, if you want to go and do some range trading, I think it's a little tougher. All the trend strategies will behave better. Whether is it like for example trend following versus trend breakout versus trend pullback, which one it is. That's where we have to decide. We cannot be looking at range bound trading strategies. I don't think that will work very well, because if it reaches a high and you want to go and short sell, the next thing you know it goes higher, then you'll be in for a lot of pain as well. All right. So this is one way for us to qualify the market. The second way, right, would be to look at the market phase as well. And currently, definitely, without a doubt, we are in the markup phase of the market. A lot of naysayers, a lot of bear mongers, they keep saying, oh, there's no reason the market is going so high. There's no reason why should it go so high. There's COVID, there's Delta variant, there's this variant, that variant. To me, there's only one reason why why the market is going so high. Okay, so can everybody just help me type money flow? That's the only reason why the market is going. Because of last year, we have $3.3 trillion printed into the financial system. $3.3 trillion is created, and they buy into all sorts of other things, be it bonds and things like that, for physical policy to print out, to give away as well. So you can see everything, the prices basically just go up. So a result of this money printing, right, is what we are facing this year. So this year, we are looking at very serious inflation. Do you all feel so? Do you all feel that things are inflating? How many of you want to, just, I'm sure you drive. If you go to a petrol station, right, the petrol prices are going up, isn't it? Right? Oil prices are going up. Why? Logistical issue. Then a lot of people want the economy open up. Then there's not enough supply. Yeah, as if you think they don't know that in advance. They definitely know all this, right? So inflation is a huge issue today, looking at this market. And in this inflationary environment, right, what should we do? Follow the trend. The trend should go up, everything go up. The only thing not good is our pay never go up. But apart from that, right, everything else also go up. You go and buy a house, I think houses prices also go up. Okay, at least in Singapore case. Okay, in Singapore case, the prices of houses are going up. If you go and buy luxury watches, the prices are going up. You go and buy car, every shit is going up. Everything else except our pay. So this is a real life threat. It's a life-threatening thing. In that sense, it's livelihood-threatening thing. It doesn't kill us, but it makes us feel very painful. So it is all because of this phenomenon. That's why, right? If you understand all, like why is it like this, right? How come COVID things still go up? How come things can become more expensive? I thought economy very bad. Well, Yes, the economy is bad. I agree. And the cases are really a lot. So I mean, having touched on this, to all my fellow Malaysians, please stay safe, stay indoors, stay healthy. I hope that you will get over this really, really soon. Okay. So that's on a more serious note. So over here, right? Inflation really just make everything more expensive lah. So everything more expensive, the market also go up, everything also more expensive. So in this case, right? That's why the market is just all rallying. And if you want to go and short sell, I don't know why you are going to short sell. Like you short sell, something inside the brain here also sort already. The market has proven that in 8 times this year, right? Every time it pull back 3% and it bounces back. It pull back 3%, it bounces back. 8 times already, Total of 8 times. And if you still don't follow this sign, right? You still insist, every time break new high on a short sell. Good luck to you. Seriously, because the market actually went up by 20%, despite all the movement. Okay, net, when you start 2021 to now 8 months down the road, we are up about 20%. So if you want to go and short sell an all-time high market, you are taking your thousands going against the billions. So how do you think you will turn out? Not so good, honestly, right? Okay, so far, guys, all good. Can understand, yeah? So if it's good, can you just help me type? Yes. Good. Okay. Yeah, and then like what David said, today is 20K cases in Malaysia. How's my performance along the years in the stock market? How? Okay, last year was phenomenal. If I tell you last year is about 450%, I think nobody believes me, but like that law. I mean, since you asked, I just let you know. Over the years, 2018 was a very big year. 2019 was good. It's all close to triple digit. But before 2018 was really horrible. Before 2018, not so horrible lah. It's also about close to somewhere 30, 40 thereabouts. Okay, so yeah, but since you asked, that's beside the point. Okay, but last year was really good because one time, and I was trading on futures, so it was leverage. So overall, from my capital, yeah, it was a very, very good return. That was last year. And TS². Okay, so now we talk about this. Now let's talk about choosing a good company. Now, a good company, right? This is very subjective. Okay, so let's all agree that this is subjective first. Why? Because we look at the numbers, right? We can make up different interpretation of numbers. When it comes to accounting, if you study accounting, right, you know that there are some ways that they can massage certain numbers. They can make numbers appear better, or something that is lousy, right? They can make it less lousy lah. In that sense lah. So that's fundamental filter. So whatever that we choose here, right? At best, we just use a subjective. We need to know that it's just a best guesstimate. Okay, at least that's the way that I do it, because my trading style, like I said, I'm looking at weeks, at most days, mostly. So that's how I select lah. And my fundamental of the company don't really change in between. So what will affect? The kind of scandal, the kind of news, yes, they will affect my selection. But apart from that, nothing really will change lah. But then again, right? I also want to share with you here what do you consider a good business. So this thing, like again, I say it's very subjective, right? So I want to use a more objective way to go and compare. So what is a more objective way of comparing? Number one, I can be looking at fundamentals. Okay, so fundamentals, it's about the company versus the industry peers. For example, if you are looking at Apple, okay, if you're looking at AAPL, you want to compare the industry peers. You don't want to compare it to like Boeing, right? It doesn't make sense. One make plane, one make one make plane, one make iPad or iPhone. So it's like totally different industry. So you don't compare like that. If you want to look at Apple, you better be looking at companies like Dell. And if let's say you want to look at Boeing, then you can be looking at companies like Lockheed Martin, General Dynamics, Raytheon, etc. So they have to be comparing literally, right? Apple to apple lah. You don't just take one apple and compare to a pineapple, then same No, they're not the same lah. Why? Because certain industries, they have certain industries, they generally have like higher leverage, higher gearing ratio. Some industries don't have. So if you compare them, right, differently, like for example, if you look at Boeing, a lot of things that they do, right, it's all growing based on debt. So if you look at the debt to equity ratio, usually they have quite a fair bit of that. But if you compare it to another company, which is also big, like Visa practically provides a network, everything, but they don't need debt to grow on. The business, as long as people spend more, e-commerce, whatsoever, and now they are going to accept a USDC, which is a stable coin, right, in crypto. So they're going to open up and accept that. So the more transaction they process, the more money they make. So if you want to compare between these two companies, it will be a very unfair comparison because Boeing is very capital intensive, labor intensive. The capex is usually higher. All right, so we must always compare the company to the peers. Like for example, if you look at public bank in Malaysia, then you compare it to RHB, compare it to CIMB, compare it to Maybank. You don't go and compare to Citigroup, like don't make sense, different companies, different countries. You don't compare it to like DBS or UOB from Singapore. Like for what? You compare among the peers, the industry peers, then you will know, okay, how has it behaved, or whether is it like better or whether is it lousier. That's that kind of perspective that I want you to hit into. Okay, so guys, all clear, right? So don't compare a company that have two different things, though they have nothing to do with each other. Then no point, right? So that's one thing that we choose. And apart from that, right, here is something that I think a lot of people fail to take notice. I want to choose Fluency as well. So this is a lot more from a TA point of view, because this is going to set up the next step, which is TA, that I want to talk about. And I'm a keen believer as well as a practitioner of technical analysis. I myself, I have, I went for the certified financial technician examination as well. So over here, right, what kind of stocks do I not want to trade? Okay, I don't want to trade stocks like this. So case in point, right, if you look at some of the Malaysia stocks, okay, some of the Malaysia stocks, right, they are very hard to catch on. Why? They just don't go anywhere. Then suddenly, right, fly up. And then after fly up, you go and chase, you go and buy, right? Then it starts to don't go anywhere. Then it starts to come down a little bit. Then you be like, hey, why like that? You case in point, you go look at DG, same thing. Bo tai bo ji one DG will go sideways, suddenly fly. Then fly already, right? You buy only, the thing just goes sideways. Then after that, you just tak boleh tahan, you sell already, then guess what? Then you fly again. So this kind of stocks are very hard to trade, very hard to catch, very hard to time. So we should not be doing that. At least that's not my style. It's okay if you have a perfect, if you have a skill set to capitalize on all this, it's perfectly fine. Today, my point of view is not to override you. It's not to share something that is in conflict with what you know, but more so is just sharing with you my perspective, something that has worked for me for the last 12 years and something that I'm using today. So I don't like the kind of stocks that are very hot. I don't like the kind of stocks that are just anyhow fly fly up, fly down. Like how dragonfly. Have you seen how they fly? If you try to hit a dragonfly out of the air, right, you have no idea how hard it is. It is very easy to hit a fly out of the air. Why? Because it's very predictable. Then you want to hit dragonfly, shoot here, fly up, fly down. So then when you try to hit, very hard to hit. So stocks like a dragonfly kind of stocks, don't want so unpredictable, not nice one. So what do I like? I like this kind of very, very defined swings. What do I mean defined swings? You can see the prices are connected. The structure is nicer. It is a very predictable trend, as it goes from a low, it goes to a high, then lower, higher low, higher high, higher low, higher high, etc. So all these kind of stocks are a lot more predictable, and they allow us to pick out a certain level for us to be looking to get in on these stocks. And that's why I say this one will lead me directly to the TA portion of what I want to share with you. So in TA portion, right, what we are doing is basically just to wait. We are just waiting for the correct timing. Okay, at the end of the day, right, it's all about the timing. Okay, can everybody just help me type time? Okay, just help me type this word time. Okay, time is the most important asset in trading, because if you have time on your side, you are not pressed for time. You are actually able to just, literally wait for a very, very nice price area whereby you can get in. And that's what usually I do. Like, for example, recently, okay, the last few 4-5 weeks, I would say, I'm a lot more active trading cryptocurrencies. So I do trade cryptocurrencies as well. I mean, after all, after trading so many different asset classes, right? Then you realize that wherever the money is, right, that's always the easiest market to trade lah. So the last few weeks I've been looking at that. I am in that. So why I say that, why I want to bring up this, right, is because what I wanted to share with you is this. A lot of people, they just chase, okay? They just chase and go and buy their whatever stocks or coin or whatever at the current price. I'm a price taker. So you give me the price, I take, then I just buy. Is that the right way to do? No, we should never, ever be a price taker. So just think about it. I'm very sure you have those experience, right, of doing bargaining when you are doing a shopping, right? I'm very sure people, we do bargain, correct? So as we are doing our bargaining, right, usually whoever takes whose price, then the person will win, right? So if let's say the guy wanted $100, you get $90, and then you in the end got the price you want, who win? You win the negotiation. No? So same thing when you are coming to trade, right? Same thing. If you are just taking the price right now, okay, you don't care anything, you just chase FOMO, rush in, then you are doing what a price taker will do. So who wins? The price giver, the price setter wins. So in trading, right, or investing, always be the price setter. That is my point here. Okay. Always be the price setter. So can everybody just help me type price setter in the comment section? I will appreciate that. So be the price setter. That means based on technical analysis, you set the price that you want. You set the price that based on, okay, I'm looking at certain maybe key support, key resistance. You can be looking at pivot. You can be looking at trend line. Then you determine that, okay, I'm not going to buy at that price. I'm going to do it this. I'm going to do it this way. So when it goes there, I am going to take action. So I am waiting for the price that I want rather than the price that they are giving me. That is very important. So like Mei Ting is asking, crypto is crashing from high now. Yeah, that one crashed for many months already. So do I think it's the right time to buy now? Certain coins, if you take a look at it, most recently, if you look at the last 2 weeks, I think there's a good movement. Okay, there's a very, very good movement. So if the key levels can hold, right, I really think that there are some good opportunities in there. Okay, so how do I define a company that has good or lousy fundamentals? Great. So later we'll go and take a look at it using what do you call it? Using the live demo. All right. So over here, this is basically how my chart looks like. And you'll realize one thing, it's very clean. So I never like my charts with a lot of indicators. My charts are usually support resistance, trend line, and then I also have pivots. That's it. That's pretty much about it. I don't really have, like, wow, what indicator, RSI, MACD, moving average. Then you combine 10 dozen indicators thinking that, wow, now this one become Optimus Prime. Doesn't work like that. So at first when I start my trading journey, is like that. I also put until so many, I put on, wow, got divergence, got this, confluence, whatever. Then I realized, really, man, is this the way to trade, man? Because none of the professionals trade like this, So when I was younger, I had a training of I attended the training of prop trader. So that's what they do. And then I realized that all this amateur stuff, they don't even use it at a professional level. So and then yet I see so many of the so-called hobbies okay, all the other traders, right? They are all using all these technical indicators, like trying to make a mountain out of a molehill. Then I realized that no, I think we are getting it in from a very wrong perspective already. And this is something that I want you to take out. If you are one of those traders, right, that piles on 10 dozen indicators to try to tell you something, right? You don't need somebody to tell you whether you are rich or poor. You yourself know that you are rich or poor, right or not? So in this context, right, I know that the price is going up or down. Why I need my indicator to go and tell me whether is it going up or going down, right? Because at the end of the day, all this indicator is derived from how the price action moves. Make sense or not? So this is where, right, the 5 steps, this is where the 5 steps for the 1, 2, 3, 4 lah. So the 5th step, right, will be just risk management. Now, what is this risk management all about? What is this position sizing all about? A lot of us understand sizing, right, position sizing to be this formula lah. Okay, so size and risk. Can everybody just help me type size? Okay, just help me type this word size. This is one very important thing, right? To keep you in this business for the long term. That means to survive. Now, that's very important. If you're in this business to win, and obviously like, oxymoron, eh? I come and trade. Obviously, I want to win. I want to make more money. Why can't I just survive? That's the thing. If your perspective of trading is that it's a 100-meter swing, 200-meter swing, then you will tend to do a lot all the aggressive actions that I want to get rich quick in 1 year. I want to get rich quick in a few months. And then you'll be thinking that, wow, Jay managed to get 300% last year. Why? Hey, did I get this in my first year? No. I really, at the end of the day, I dare to tell you now, is because I've done many wrong things in my initial stages that didn't kill me. I didn't lose all my money in my initial years, and back then when I was younger, I didn't have so much money. So I managed to survive through this period, all through this one thing, which is I'm always very mindful of how much will I lose? Okay, so can everybody just help me type in this one phrase? Okay, how much will I lose? Before you enter a trade, you always must, work out a budget. That's where your budget comes in. This is the only thing that you can control in this business. You can do all your research. You can just, your FATA, your Fibonacci, or whatever lah. Okay, everything you put in also can. But at the end, when the time comes, right, for you to just take your mouse and then you click, okay, you click buy, you click sell, you click whatever. Once you click, means what? Done deal lah. Okay, you click already, it's out of control already. So just like arrow, right? Like an archer. You take the arrow, you're gonna fire, you're gonna shoot out the arrow. Once the arrow leaves your hand, right? Okay, once you just let it go, guess what? The arrow is out of control already. Then suddenly got one gust of wind, then how? Then you sway lor, bo pian lor. Right or not? So you do up all your preparation. At the end of the day, it's just, that's my stop loss. So the only thing that kept me survive, throughout and lasting throughout is I bit kiasi lah, a bit, so I always trade with this mentality. How much will I lose? If I can lose this, right? Okay lor, I go ahead and do it lah. So that's why a lot of people saying that, for example, some very dangerous asset classes, for example, cryptocurrency. If you do not understand it, you will think that it's very dangerous. Yes, I agree. It's a lot more volatile. It's a lot more dangerous as compared to traditional behavior or the traditional instruments such as stocks, bonds, etc. But how do I go into it? What kind of mentality do I go into it? I try to understand as much as possible what this coin is about, what the token is doing. Then everything that I do, right, every decision that I do, I will always set a budget. Okay, so to back up this assumption and this view of mine, I am willing to lose how much? Let's say 5,000. Okay, then I'm just going to take 5,000, go and do that, and that's it. If that thing just crashes to zero, then it's okay lah. I lose 5,000. So it must always be a percentage. All right, it must always be percentage of your money. So this budget is always a percentage. So I can't tell you what this percentage is, because at the end of the day, you have to decide. Because you, as the trader, okay, you will have to decide. Because if you don't decide and other people decide for you, let's say, for example, today I tell you, based on my account, I'm comfortable losing up to 10,000. You may be thinking, wow, crazy. I lose one time 10,000, habis die already. Or maybe my account don't even have 10,000. I only got 4,000. Hey, if I lose 10,000, how? I still owe the broker money. So it is always about relativity. It's nothing about, how much money that guy have or how much you have. Doesn't matter. Every one of us got different environment. Every one of us got different background, different account size. But what I think can be constant throughout everybody is that we need to set this stop loss budget. So this stop loss budget, very, very important. It is what will keep you survive through the long term, because you are in here for a marathon. You are in here for a marathon. It is not a 100-meter sprint, because if you are in here for a 100-meter sprint, you are in the wrong business. You might as well just go to daunting and then you know just go and play big, small, go and play the jackpot. I think you derive more fun from it. All right. So we are in here to do this business for the long term. So we must play the long-term game. We cannot just play the short-term game to be aggressive and then after that game over. Because when we lose, right, when there is a game over, it's very painful, really very painful, because it's your life savings. And that's why, you know, some people, when they over leverage too big already, they got into losses, and beyond recovery, they go and do stupid things like you know, they want to end their life and things like that. So it's very, very sad. So don't get to that point, because before it snowballs to that point, we can control. How? Control by our size lah. It's okay not to, you know, start strong or win big. It's okay, but it is a shame if we cannot end this journey. I think that's a shame. So that's why I always share with all my students, right? It's okay to start small. It's okay to, you know, start with 2,000-3,000. For myself, at 22 years old, I started with 5,000. That was my first account. Okay, USD 5,000. So I started with that and I built up from there. It is okay to start small, but make sure that, you know, you survive long enough so that you will accrue, you know, a lot more experience. You will accrue and slowly grow the account to a certain size. Because when you have the size, that's where you can take the step, you know, towards being a part-time trader to a full-time trader. At the end of the day, you must be capitalized. You cannot just say, hey, I want to be a full-time trader. I got 50,000. I want a full-time trade. Then you got to make like what? 20%, 10 to 20% a month out of 50,000. Then it makes sense. If not, I don't know how much do you need to get by every month? If you tell me you need 1,000, then 10,000 also can, 10% a month, then you get 1,000 already. But how easy do you think it is to hit that 1,000? I think it's a lot easier to lose that 10,000 instead of earning that 1,000 consistently. True story, okay? So here, right, when you are talking about sizing, right? Let me just give you a case study. I hope that there's no John here today. I'm just selecting the name, okay? So no offense if you are John, not saying you, okay? So a lot of people just do this when they have, let's say, a stock at $8 and then they buy in 5 lots. Then after that, right, you can see the stock just continue to go up and up. So at $20, usually what will people do? Buy more lah. They want to chase so they'll say, oh, the next time come down, I buy. Then guess what? The next time really come down. So what he do? $15, he buy. And usually, wow, $8 to $20, I make a lot of money, you know. 5 lots, some more, I make a lot of money. I can change car already. So this time, if $15 go up to $100, I what kueh already. Correct or not? That's usually what people think. Then he buy more. So how much he buy? He buy 10 lots there. Then after that, it's very familiar, right? I think a lot of people tend to do this, right? So this is called doubling up. So as you do this, and then you don't have a plan, you don't know where to exit, then you see the thing just go, oi, how come go down already? So finally, it goes below your entry price, and then you finally exited at $4 with all 15 lots. Now, this is a very typical inverse pyramid position sizing. Why? Because you think about it, if your first level is 5 lots, your second level is 10 lots. In this kind of structure, right, your pyramid is not stable. Your pyramid will be lopsided, going left and right. So this is what I find most trader, you know, when they die because of this, because they buy their sizing really anyhow. Okay, if you have just done the reverse, when you enter with a more stable base, and then when you scale in with something smaller. All right, then you go and look at the total loss, the difference. Okay, if trader uses the reverse pyramid, the loss on first lot, okay, will be $2,000. The loss on the second position will be $11,000. Total $13K. Whereas if you bought more here and less up there, okay, your first chance you bought more, second chance you bought lesser. Guess what? You still lose. Yes, make no mistake, you still lose one. But in the same scenario, just because you variate the lot size, your net loss is lesser right now. Okay, so here's the key. The key here, right, is you can have the same entry, the same stock, But if you just change the sizing, that's why some traders are very profitable and some traders are just normal, or some are just like, wow, super, they one trade lose then die already. Why? Because they will just buy more and more and more. So this is where I want you all to take note of this lah. Never ever use an inverse pyramid. Okay, never ever use an inverse pyramid. Guys, are we clear? So if it's all good with you, just tell me type inverse, okay, pyramid. And this is basically, right, whatever that I've just mentioned, basically is just the TS² framework that I wanted to share with you lah. Okay, all good. So if you, so far okay now, all good So can you do me a favor? This post, right, that you're watching it from, right, can all of you just do me a favor, just help me like this post, can? Okay, so let's get some more engagements on a investing note. All right. Okay, so over here. So this is the 5 steps blueprint for your success, which is the TS² framework. So once you have this, this whole flow chart, right? What you can do is really just to reduce the layer of risk. It's never about risk-free. Risk-free, you just keep the money under your pillow. I think that's risk-free. But it's about reducing risk and doing what you can in terms of your research. And then you just take a trade. So you just execute the trade and then you just stick to the plan. And this is the reason why, right? Whenever, people ask me about certain stocks, like for example, Tencent can buy or not? Huya can buy or not? I'm like, what's your plan? Why you ask me can buy or not? My plan and your plan different, If I tell you can buy, it's because, I'm an intraday trader versus you are investor. Where got same? Different ma? Or let's say I'm a swing trader. You are intraday trader, I tell you can buy. Then you tell you this guy siao, correct or not? So that's where I think it's more important to have a plan rather than just opinion. Like my trading style and your trading style, I believe will be different as well. Okay, guys, clear or not? Okay, so now let's head on over to the demo lah. Or let's head on to over to the demo. So I show you exactly what we do in this TS² framework. Okay, so shout out FYI. If you would like to connect with me on investing note, right, please do. You can go and look for me at Jaytun, okay, Jaytun. So you can just just connect with me over here. English, Chinese, I'm both fine, bilingual, but of course, if okay, now I'll be typing in Chinese typing in English, not in Chinese. Okay, so yeah, this is where we can connect. So now let's talk about the demo itself. Okay, so over here, meanwhile, if you've got any questions, right, just post it in the comments section. Just post it in the comment section, and then we will, anything I'll just answer from there. Okay, so over on the TS², right, step number 1, what is it? Step number 1 is always my finding So I always want to find the strong stocks. I always want to find the star players. So how do I know where the stars are? This is one site that I use, sectorspdr.com. So over here on this side, right, you can see that, let me zoom in. Okay, if I scroll down a little bit, you can see there's a sector tracker over here. So once I click on sector tracker, and then if I put to, let's say, I want to know what's the strongest in the year to date. So when I click year to date, right, that means year to date first Jan till now okay, first Jan till now, right, you can see which are the strong stocks. Moderna, Fortinet, Nucor. I'm trading Nucor. I'm in Nucor. So NUE, the ticker symbol is Nucor. Please, guys. Disclaimer first, whatever that I see here and I share with you, right, it's not a buy sell signal. It is purely from an informational and educational point of view. So please do your due diligence before you take any trade. Okay, so whatever that I share today, whether I have positions in that or not, I will tell you, but doesn't mean I'm in, you must buy you get what I'm saying, right? So don't anyhow buy you anyhow buy then I must tell you bye Okay, so S&P 500 has performed about 17%. So let's kicked out some of the some of the sectors that are really not performing for the whole of this year. So if you look at discretionary, I think it's underperforming. You look at staples, it's disappointing. 17, healthcare is like so only. Okay, it's just there. Industrial materials, okay, recently coming back. Real estate went up by a lot. Technology is okay. Practically utilities, you don't go and think also. So nothing much there already. Okay, so industrial is recently coming down, used to be really strong last year. So in terms of the strongest, where is it? It's definitely in energy. So energy is intrinsically linked to oil. So as long as oil prices go up, all your energy companies, or all the oil majors tend to go up. So this one, imagine we just don't care about this, right? What's the second best? Second best is real estate. So real estate, there are two things. Number one is REITs. That's one. The other one is all the property management company. So let's go and find out what kind of companies are in here. Okay, so basically I use this as a top down. So I know what I want to focus on. Okay, I want to be focusing on number one, real estate. That's one. And I'm using year to date. Okay. The next one I will be looking at financials, XLF, followed by, let me see, energy, because of oil, I don't want. Then communication services, I think this is not bad, XLC. Okay, so these will already give us an idea of what is leading this year already. Okay, guys, are we clear? If you are clear, can you just help me type sector tracker? Can you just help me type that? Okay, can you just help me type this, sector tracker? So basically we are tracking, and I want to know like, is it which one is stronger? So looking at real estate, looking at XLF, XLC, these are quite strong. So and for this demo, right, I'll be using the US market as an example, because there are a lot of information we can find on the US market. Yeah, so Singapore, Malaysia market a bit yeah, I don't know. The information very hard to find. Singapore also very hard to find. I think Singaporean, we go everywhere, we got like a carrot head, our head is being replaced, then become a carrot. Like why? Cai tao. Everything need to pay one. Everything must pay. Everything you pay, then you get it. For the US, right? They like doing charity. Everything you also have. That's why I like to trade the US market. Okay, so okay say some joke, lighten the mood a bit, right? If not, later you're very bored. Okay, so I'll be looking at these three. So now I'm going to head down to, let's say, the first one, XLRE. XLRE is real estate. So real estate over here. So over here on the real estate, let me look at the holdings. They have been really running quite a fair bit. So you go to portfolio, right? You go to portfolio, here is the top 10. The top 10 is usually REIT. You got REIT. CCI is a Crown Castle International Corporation, REIT. So REIT, you can't really do any, you still can do FA. I'm not so familiar with the FA for REIT itself, because apart from discount versus NAV, steady, the steady growth of the dividend, the distribution. Apart from that, I don't really look at REITs all that much. Okay, like Simon Property Group, that's a REIT as well. So these are all the REITs mostly. So this is one group. Looking at the chart here, right? Let's say we are looking at CCI, Crown Castle International. Okay, then after you see earnings, right? And after earnings, it kept down. But before earnings, let's assume we are looking before earnings, right? Isn't this a very strong stock, right? Isn't this a stock that is like, wow, awesome, very, very strong? It is, right? Because if you compare to stocks like Top Glove, I think you're vomiting blood, So if you look at Top Glove Corporation Berhad, like mirror image, right? You take and you turn over, then become like that. So those people that bought at $9, right? They all now, wow, really, wow, yeah, how? I don't know. You all listen to who, then you ask that guy how. Because I will never ask you to buy stocks like this. Okay. So for me, it's always about finding stocks like that. Finding stocks that are able to, trend nicely. Okay. So that's really just one of the way that I find. So you can see now, right? Crown Castle, it just have a very nice rally. Okay, higher high, higher low, higher high, higher low again. So the low is over here. Then after I embark into a higher high, then over earnings, then because of earnings, this is unfortunately because of earnings. But apart from that, it's a very stable, very predictable stock. You get where I'm going with this, right? So this is one. CCI, if let's say we look at AMT, AMT is American Tower Corp. Isn't this strong? Don't you think that this is very easy to trade? Guys, do you think this kind of stock very easy to trade? It's like really if you use a breakout strategy, for example, you have a resistance line and there's a breakout retest, then you go and buy, or again, breakout retest, then you buy, or whatever lah. This kind of stock very easy to trade. Do you now start to see where I'm coming from? Why I tell you don't, go for stocks like Top Glove, like Genting SP, Genting Berhad, and what else? Tencent. Ridiculous lah. Why waste your money there? So agree or not? If you agree this is easy, can you just do me a favor? Can you just send me type EASY, easy? This kind of stock relatively easier, right? So this is why I like to, have a structured approach and trade this kind of stocks rather than it's kind of. So got Bursa stock or not? Got Bursa stock or not? I am very in Bursa. I can't remember that many I really can't remember that many. One of them I think is DNO. DNO Green Technology Berhad. I think this is one. Strong man, not strong man. Very strong man. You go and look at if you go and look at things like, for example, if you go and look at MMC Corp, okay, MMC Corp Berhad, MMC. This kind very hard to trade lah. Do you all get where I'm coming from? Very hard to trade this kind. Like, ayo, you don't go. Then you don't go and suddenly no news, you fly. Then fly already, I buy, you come down. You walao, what you doing? Then I cannot stop loss already. Then it go up. Then it like give you some hope before you can catch it. Ui, what piang, fly up there already. How to buy? Then you go and chase there. Then you come down and trigger your stop loss again. Then what happens? You feel like punching. You feel like punching the screen, right? So majority of the stocks are like that. Majority of stocks are like that. So I don't really know the Bursa market that well because I don't really trade it. But from time to time, my students will ask me, so I just look at stocks like this. So I think JHM is a very this is a very strong one. Very strong one. Recently cleared at 215. So this is one that I traded together with my students at 215. We are already out. Then after it went to 242. I mean, just like that, bo pian. Okay, but this is a very strong stock that recently just coming back. I think this is something that's very predictable as well. Okay, so back to this idea, right? We go from the top down. We're looking at real estate, for example. Then DLR, Digital Realty Trust. This kind also okay, but not as strong So what is another sector that was strong? Financials. Financials I think was quite strong as well. So just now over here, financials, if you go and look at the portfolio, that's where we have Berkshire, JP Morgan, Bank of America, Wells Fargo, etc. So if we look at Wells Fargo, I don't know, looks okay. JP Morgan, now it's starting to come down. As it was strong, now starting to come down. Citigroup, this one cannot, definitely come down already. Okay, definitely come down already. So like let's say Morgan Stanley, American Express. I think American Express is not bad as well. It came back. See, this kind of strong. So now on the over here, so on this framework, right? You see, we find. So now we know how to find, correct? Then after that, now we want to go and qualify immediately. Like for example, here on American Express, what am I doing? Hey, this is strong. This is really predictable. So what do? Identify for key level to buy. So is this a strong stock? Yes, it is a strong stock. So just now I think Mei Ting was asking, what do I look for? I compare like for example the earnings. I compare the debt to equity ratio. I compare the net profit margin. Yeah, among all others lah. So AXP, who am I comparing it to? Visa, Mastercard. So if you're looking at Visa, it's not so strong for Visa. Look at Mastercard, this is the weakest among the three. So AXP is the strongest among all, right? So this is what I do . So I find, for example, now after I find American Express, what do I do? So next thing, choose already. I know it's a good company. Then I'll just go and do my technical analysis. So how would I actually do technical analysis on this? So let me just clear it up and walk you through the process itself. Usually I will want to look at the key level. So I will definitely start with the weekly time frame first. So on the weekly time frame, you can see very clearly that this year, because of all the money influx and everything, the stock just fly lah. Okay, the stock literally just fly. So I'll be plotting a few key levels. I think one of the key one would be here. Then another one would be probably somewhere here. And then obviously you have all the high areas over there. And anything lower, I'm not too keen really, just like that. All right. Then I will also have my trend line. So over on the trend line, okay, this trend line is a little tricky because you can see that the trend over here. Okay, so this trend used to be a lot more predictable like this. And yeah, this is a very predictable trend. And then COVID came. And after COVID, the whole thing just haywire and then it just rush up. Okay, so if I may change anything, right? If I may change anything, probably I would just change the trend line to suit the market of today. Okay, the market of today, if I were to change out something, it will be looking something more towards this angle. Okay, more towards this angle. Something like that. Okay, so this is something that this is something that I do usually. All right, something that I do. Let me just change out the color so I can differentiate easier. Okay, so now with this in mind, right? One more thing that I do is I'll look at pivots. For example, I look at pivots. I do have my own indicators as well. So, but I'm not going to use it over here, just to give you an idea of, like, for example, now, do I have a swing up? Do I have a swing down? This is just yeah, that is just my own indicator about. However, over here, right? You can see that now making use of this level, right? I know that up here it's a resistance. So what do I do? I'm going to wait for a nicer level to buy, which it can be here, or the better area will be here. Okay, I will be looking to buy in that area itself for American Express. So once again, right, guys, this is not copy trading. Please do not just copy blindly. Do exercise your own due diligence. Do exercise your own due diligence, and yeah, I'm just sharing it from the educational and informational point of view. So you remember just now I talked about being a price setter. You remember that? So be the price setter. Wait for the price that you want to buy to get in. Don't go and just I buy now lah, can lah. Then you go up lah. Then come down how? Then come down die lah. So what we do, I set a predetermined price. So the price, let's say, a much better price level for me to buy here will be 150 area lah. Okay. So if let's say over the correction, if it comes back a little bit, let me just switch this over to the daily chart. Immediately you can see that over here, where would be a nice level for me to look at? It would be somewhere around the 160. So just now was the weekly, that one will be too long. Okay, so if now like that come down, then it starts to come down over to here. And if I can see some form of consolidation, that will give me the conviction to know that, okay, this is a much more attractive price to buy than now. All right, 161, 1615, that's a much better area for me to buy as compared to now. So yeah, this is what and how I mean, in a nutshell, how I would be doing things, how I would do it. And I will also make use of the pivots on my own level. Like for example, if I manage to get in a 161, right? Where will be my potential target? Well, 170 is the first one. The second one is 174, thereabouts. So all this becomes a target. Okay, all this become a target where I know that I'm able to take my positions off. So first, to keep it very simple, know what you're looking for, know where you're looking for. And then the next step is a good company. Okay, go to the next step. What is this? Identify a level I want to buy. So in a market like this, if you want to do a breakout, can or not? Can. That means you want to break out of the previous high, you go and buy, can. But you must know that your risk to reward will not be so nice. If I buy here, the risk to reward is always the nicest. I mean, in a pullback, relatively. Okay, so this is American Express. Something that through this process, right, I'm able to find out So I'm trading the strong stocks. So now, what is the TS² framework, you may ask? So the TS² framework, right, to put it in a very layman term, is literally called trade strong stocks, just like that. Just trade strong stocks. Okay. So can everybody just do me a favor? Just help me type TS2. Okay. Just help me type TS2. So at least you know what you have just learned. Okay. So using this same exact framework, top down, which one's stronger, find the top holdings, find the stocks, and then identify the level I want. What does it help you with? It gets you over the kind of guru syndrome whereby you just follow a lot of people say what you buy what lah, you know, top glove, buy. Kosan rubber industry, buy. It's like anyhow buy, then later buy. you get what I'm saying? Right? Okay, so guys, so far okay, all clear, all good. If you have any questions, please ask in the comments as well. So yeah, then Jenny Tech. Let me take a look at Jenny Tech trading. Jenny Tech. Oh yeah, this guy, how to chase? I mean, if you're in, congratulations, and you huat gui already. You massive huat gui. But this one you're not in, you cover until bobaksai. Why? Just go down, trend, then suddenly right, bye, fly up, like, hey, hello, you flew $2, fly to $18. How I buy? Then here you buy, I also don't know how. You chase, also wrong. You don't chase, then in hindsight, it make you look stupid. So it's like, how to get in this kind of stock? Very hard lah. That's why I say for Malaysia market a bit tougher, because if you look at the KLCI index, right, very evidently, you look at what is happening now. Okay, maybe because they want to change government again, then there is no no hope or whatever. I don't know lah. But if you look at this versus you go and look at US, which one do you think easier to trade? US lah, obviously lah. And after all, you know what's one best thing? If given a choice, right, would you want to earn ringgit or would you think it's better to earn US dollar? I think you have answered, right? Yeah. So my choice will always be like that. So even you see, if I'm a Singaporean, right, I don't trade Singapore stocks. I buy, yes, I do buy a bit here and there, but I don't trade actively. Commissions are expensive. Movement is not a lot. Very rarely I can find some very good stocks. Singapore got good stocks. Oh God. We also got like you see Propnex. This kind of good one. This is not bad one. Okay. Then if you look at Union Gas, I think. Union Gas. This is also not bad. Strong one. Also have lah. So how did I have that? How did I have all the stocks in the back of my mind? Because I got a proper framework lah. So this is the framework that I just shared with you lah, and you just have to go and develop it, go and expand it. If you go and look at CLN, I think it's APEC Realty. This is ERA. ERA is strong also, correct? Then if you look at Kim Lee, Singapore, Kim Lee, the kopitiam chain, strong correct or not? But most people will not think of this kind of stock. What would they think of? Oh, they immediately think of, lockdown, they go and buy supermarket stock. So Sheng Siong, immediately go and buy. Got go up meh? Last year, yes lah. But this year got meh? Don't have already, because why? Everything priced in already. So if it's after the news, then you go and chase, right? That's why every time will be a little late lah. You get what I'm saying? So any market also got strong stock one. It's just how easy for you to find a strong stock only. Okay. So one stock I think with a lot of potential, right? Let me see. JF Technology. Let me see. Okay. Why? Why did I say this? Because number one, it belongs to semiconductors. And worldwide, right? If you look at semiconductors, for example, referencing to the US, is this strong? Strong then just break all-time high, right? Yeah, strong So it's just there So SOXX, that's strong. SMH, is it strong? Strong. So what do? Look for the stocks within SOXX, look for a stock within SMH. So how to find? Let me give you a shortcut. If you go ETF.com, right, /SOXX, okay, that's the ticker symbol. Immediately you will be routed to ETF.com /SOXX. Then straight away come down, you can go and see. You see they got price chart, they got everything. Top 10 holdings. So these are what the top 10 holdings are. You have Nvidia, Broadcom, Intel, Qualcomm, Texas, AMD. Don't tell me nothing to buy, okay? Guys, usually it's no money to buy lah. So applied materials, Ahmad, AMAT, yeah. I every time call it Ahmad lah, but yeah, applied materials. This kind also just there like, you know, like going to move. So make use of this approach lah. I think you will find some very nice consistency through there. It's not going to get you rich quick. If you are in here to get rich quick, you're in the wrong business. But if you're here for a long run, to get a skill set, to go for a long term, like now in my mid-30s, I intend to do this for the rest of my life till I retire. Yeah, it's something that I want to do for long term lah. That's why you can see things I share is a lot more grounded. Not so like get rich quick kind of things. If you want to get rich quick, I think Malaysia we got 5 letters lah, JJPTR. I think that one can get rich quick. So go and try your luck there. Okay. S1, S2, S3. Well, that one is pivot. So just go and Google the pivot level. I believe on investing note, they should have it as well. I think it's over here. Then if you type in pivot, oh, don't have. Okay, then you go to TradingView and use. Yeah. Yeah, so it's just pivot. Just go and Google pivot. Okay, pivot points. Just go and Google that. Okay, that's Paul. Rest Inc. Let me see. What is that? Rest INTC. Resting Berhad. What is this? Never see. Oh yo. Yeah, recently quite hot, but honest question. So hot, then how to trade? That's always the question, right? I honestly don't know how to trade this kind. You ask me now that it gap up like that, and then it show a massive rejection like that. Will I still dare to buy here? I don't dare. I will never dare to buy here. Then if I don't buy here, later go up, I look stupid. Then I buy here, it come down, I to it, I want to die. So either way also. No lah, don't lah. Look for opportunities in, in this. I think this is a very, very strong, very manageable stock that is not going crazy, still there, no news, not hot. No good, man. This kind no good, man. Guys, isn't this no good? Is this stock good or no good? Like that DNO, is it good? Bei pai lah, ho. See, very structured, what? Very nice, what? No, man. You see? Higher high, higher low, higher high, higher low, higher high. Then when you're gonna buy the next one? Now it's here, right? Then wait for breakout, then retest, then you go lah. Simple. Isn't it simple? Easy, simple, predictable. That's how trading should be, ma. No stress one. Why make trading so stressed? So if you want to buy stocks like Tencent, I think somebody will ask lah. So type wrongly, sorry. Ticker symbol is 700. You want to buy this kind? I only give you 2 words, sure or not? You what kind of price? What kind of price you want to buy this? I also don't know what kind of price can buy this. This thing drop until it's like I'm taking a pen knife, right? Like now, I'm gonna throw this knife at you. And you're like, hey, stab me. Come. Make sure hit here, okay? Make sure there's a hole here, 1 cm, don't miss. Hit here. No logic, right? Okay. So let me refresh and see any comments. JJPT. GG liao. They will come out another one, maybe RTPJJ, whatever. You never know. Okay, so yeah, that's pretty much what I have to share with you. Okay, guys. So far, okay, now have you learned something? Most important, I mean, you spend 1.5 hours with me. Have you learned something important? Have or not? If you think you learned something, useful, you learned something important, right? Can you just help me type this? Give me some form of encouragement. Just help me type value. Help me like this post. Okay, help me like this post. Help me share out the post in investing note as well. Okay, so do me this favor. Just help me comment value lah, at least. I mean, if you're really getting value out of this, then final. You can engage with me on investing note as well. You just look for @jtun yeah. So this is me lah. Okay, this user /jtun. You can go and find one. Okay, so I'm here. Just connect with me, and basically this is what I have to share with you today. And I appreciate your time here. Let me see if any other questions. Don't have. Great, awesome. Okay, great. So now final recap. This is what we've gone through. This is the TS² Framework, which is representing trade strong stocks. So step number 1, always find the strong stocks. Like use a top-down approach, go and see what are the strong sectors outperforming in a certain time frame, then go and look for individual stocks there, then visually go and filter through. Is it uptrend? Is it downtrend? Like downtrend, just throw outside lah, don't buy lah. Then fundamental filter, choose a good company in terms of it can be price to earnings, it can be whatever lah. But for me, I'm a more technical person. I'm like 80% technical. So I make use of technical analysis. I want to have a predictable chart. I choose that one. Then I'll wait for the price that I want. Price setter. So guys, remember, if there's one thing that I want you to become after this webinar, right, is be a price setter. Don't be a blah blah sotong follower lah. Be a price setter. Come to the price I want, I buy. You don't come, I don't want to buy. But sometimes you do this, right? If fly, then you must accept also lah. Okay, no, you fly already. Part and parcel lah. Got good, got bad one. Then finally, calculate the your risk, what makes sense to you, how much you can lose. Then just take the trade. Basically that's about it. Okay, so very very happy to for and once again shout out to Investing Note for inviting me on board to share, to do this sharing session with me. Let's connect on Investing Note, or if you have Facebook, we can connect as well. You can just go and look for me later. Yeah, so thank you Mei Ting. Yeah, thank you everybody, David and Alexander, the song, Paul, David, yeah, Trading Bursa. Yeah, great. Okay, so thank you guys, and right now I'm gonna hand the time back to Investing Note. So thank you, and if you have anything, see you. You just ask me on Investing Note. Just add JAYTUN, and then I'll be able to see that you tag me in that question or whatever. Then I'll answer that. Okay, so that's all I have, and thank you so much. Now back to Investing Note. Take care, guys.
All right. Okay. Thank you, Jay. Thank you, Jay, for the sharing.
Thank you.
Okay. So before we end, right? So one last thing that I would like to remind everyone. So on this coming Saturday, we have one investment summit. So if you have not signed up yet, later I will put inside to the comment section. So if you have not signed up yet, do remember to sign up. So we have a lot of speakers from Bursa Malaysia, from M Plus Online, also from SFM1. Will be doing some sharing with you guys. All right. So later I will put in the registration link into the comment section. So do sign up. We will see you on this Saturday. All right. Okay, so thank you for tuning in to this sharing session once again. Okay, and we'll see you on this coming Saturday. All right. Okay. Bye bye.